Navneet Munot, CIO at SBI Mutual Funds as well, joins in to talk about his thoughts on the markets. Navneet, hi, good morning. What is it that you're making of this technical rebound by world markets, not just us, after trying to absorb that knee jerk from the Brexit shocker?
So markets are not a one-way street. You see two-way movements, and of course I think some of the markets that got battered very sharply, they are seeing some bounce back from a very low level. But one must remember that this is not a one-off event and it's behind us, and there is a reason. I mean, there shouldn't be any reason to be complacent again. One of the things we have to keep in mind is that in markets, every asset class is valued based on where the risk-free rate is and what is the risk premium for that asset class. Now, one of the challenge for a global investor is that risk-free rate has become very, very low. I mean, at the historically record lowest level. So if you move money out of stocks and move into bonds, the so-called safe haven assets like US Treasury, and look at the yields there, whether it's a German bond or Japanese bonds or Swiss bonds or the US bonds, and then suddenly you start thinking, okay, I'm better off in equities because dividend yield is higher. So that's one challenge that everybody is grappling with, because keeping cash is so prohibitively costly, and then bond yields are very low. Having said that, I think we are in a period of uncertainty, and one shouldn't get too complacent by seeing one day of rally as far as global markets are concerned.
So Navneet, what happens from here? Because it's an uncertain trajectory from here up until next 2 years, when Britain's going to actually detach from the European Union. Do you think the market, and India also included, would be a volatile ride from here? Or do you sense, because India is working with its own dynamics, post this knee jerk, we're back to square one and back to tracking the monsoon as well as seventh pay commission earnings, etc.?
So of course, I think as far as the global markets are concerned, you are right that we are in a period of heightened uncertainty for a long period. This is going to be a long winter. A large part of the Western world is dealing with several structural challenges. You have aging population, you have stagnating growth, you have deflation, jobless growth, so many challenges they have, and trying to solve it through a cyclical solution like printing more money or negative interest rates or somewhere zero interest rates. But the problems are structural in nature. What Brexit highlights is the dissatisfaction of a part of the population which is seeing that we are not getting any benefit from the globalization, we are not benefiting from what the central banks are doing. There's a small part of the population that's benefiting, and I think we'll have to wait and watch how much it spreads apart from the Britain. So I'm sure similar voices are gaining strength in other parts of Europe. I think we are seeing similar polarization in politics in US. So it's going to be a long winter. I think we will be in a period of uncertainty. India is completely different. Contrasted, when those guys are talking about more protectionism, more favor to the domestic industry or domestic business, anti-immigration, India has carried out the most significant FDI reforms in its history. We are opening up a lot more. We are doing business in India a lot more easier, and you talked about some of the other factors which can revive growth here. So India is in a slightly different boat. It's just that historically we've always been impacted by these events, and still FII flows are important. So I'm sure we will get impacted, but compared to our own history, relatively lesser this time, because the macro fundamentals are in a better shape and domestic flows are strong.
Okay, so Asha, winter is here in Game of Thrones after 59 episodes, and Navneet Munot saying that it's going to be a long winter at that. So keep in mind that's
all part of the prophecy.
Yeah, it's all about the prophecy. But Navneet, so if it's gonna be a long winter, should what would you do tactically? Would it be prudent for people who are opening new SIPs or investing into a fund, take a balanced fund, or should the approach be all equities right now, because we as a nation are anyways underinvested in equities?
So there are several parts of the economy that are doing well. So despite all the macro challenges, political challenges, the stress in parts of the corporate and banks balance sheet, several businesses in India over the last couple of years have been growing profitability, and stocks have done well. I think it's a stock picker's paradise, and I think as a fund manager you can always identify a couple of stocks which can do well. And now we are also seeing the beginning of a good cyclical recovery. I mean, you talked about the monsoon earlier, you talked about the 7th pay commission. In fact, I think that one of the interesting things that's happening in India, which is underappreciated, is the retail credit. You look at the new small finance banks, the way MFIs are growing, the way private banks, particularly on the retail credit, are growing, and I'm sure at some point in time even the PSU banks for their growth will start focusing a lot more on retail credit. The credit availability in India in next several years across the spectrum can go up substantially. So of course there is a strain in the corporate balance sheet, they will find it tough, but for a large part of the population credit will become easier, and that could be another growth driver. So I think India has its own set of growth drivers. We have a good leadership in place, several reforms have been carried out, and I think India can relatively do well, but I'll again repeat the same point. We shouldn't remain complacent as far as the global economy is concerned. I think there is excessive leverage in China, there are issues in Europe, and the politics is getting murkier in the US, and we have to keep all these factors in mind.
Navneet, the other big trigger could very well be the 7th pay commission recommendations, and the cabinet is going to decide and take a final call on those today. And you know, for long we've been talking about as to how this is going to give a good boost to domestic consumption, but the fact of the matter is that domestic companies, your consumption companies, so to speak, they've already begun pricing in the upside from the 7th pay commission recommendations, and some of them are very richly valued as well. So what do? You know, in cases of NBFCs, do you take a sectoral call, not buy a Bajaj Finance, buy the rest of the pack, or again this continues to be a very stock specific, company specific story according to you? I'm not asking names, I'm just asking for the call here.
No, surely, as I mentioned earlier, that it's completely bottom up. I think instead of taking those sectoral calls, of course, I mean these are the big drivers in the short run. So you have a good monsoon, you have the government spending, which will impact the rural growth, which will influence the rural growth. You have the 7th pay commission. I talked about the credit, which I think is an underappreciated fact in India. How the availability of credit can impact the consumption and the investment on the private side. I think some of these factors I think will ensure that the overall consumption growth continue to do well. But even these are the factors that can impact, let's say, next couple of quarters. But structurally, when we are at a $1,500 per capita, the way I think the kind of demographics and all, I think consumption is a much more long-term story in several categories. Probably a J curve is emerging, and I think one needs to take that longer-term call.
Fair call. Navneet, the question is about what happens to the stories domiciled in India but having a larger global exposure. We are probably no doubts about how the revenue stream or the profit stream for the domestic spaces will be, and we'll talk about that. What about the export oriented themes? There is a Tata Motors, there are these IT companies, all of these have so many intertwinings and ponderables that it becomes difficult to gauge the impact of a global event on 1 year, 2 year earnings. How do you approach investing here?
So undoubtedly, I mean, one shouldn't paint them with the same brush. Of course, those companies who have, let's say, direct exports or the business in particularly UK, and I think it will get extended to some other parts of the Europe as well, will get impacted. The global growth has been slow, has been much lower than the trend line. It's going to impact. Having said that, just when we were talking about the domestic consumption theme, and you said that it's already in the price, I assume that the same thing is likely to happen here because people are concerned about Brexit Brexit, people are concerned about the global situation. Maybe some of these exporters, some of these companies, let's say we talk about IT or pharma, I think some of it is getting into the price. In next couple of months, if the price is correct, maybe some of them actually become attractive. It's just a question of the relative valuation of I mean, some of them. So for example, the IT is definitely maturing in terms of the growth path that it had over the last 20 years and what it can have in the next 5 years. But still, India is very small in the global scheme of things. Several of them can still grow substantially over the next couple of years. And I think if valuations become right, and some of these guys don't have, I mean, most of these guys don't have the leverage in the balance sheet, the ROEs are higher. If they grow well, valuations are reasonable compared to market, they would become attractive at some price.
Right. Call. The other key aspect, Navneet, is by the way, the commodity markets have opened, and we'll just mark on the screen what's happening to the commodities as well. But having said that, Navneet, the other aspect is how does one play or one approach the monsoon beneficiaries, because there are a whole bunch of names that could benefit. Some of them already have the benefits in the price. I know you answered that question in part as well, because the reason I'm asking this again is that we've got a lot of interesting views over the last few days on the channel saying that now it may actually be time to buy companies which will benefit from the spending that comes in, that the farmers or the agrarian economy will do after enjoying the benefits of the first monsoon. So they were saying that don't look out and buy the consumer durable stocks and a few others which are the first leg of spending, because they are already taking the benefits in the price. Try to think of where the farmers will spend the money after they have reaped the benefits of the first leg, so that you make money, because those stocks are not that expensive. So it's a bit of a complicated chain out here, but if I'm explaining my question, how do you approach this space?
So I'll repeat again the same thing, and it's completely bottom up. You have to look at individual companies and take a call. But I think agriculture, for example, I mean, if you interview of the Prime Minister 2 days back on your sister channel, I think he was talking about several reforms that have been carried out, right from the crop insurance to a national agriculture market to a soil health card to different things, more spending on irrigation, so on and so forth, and if you have better monsoon. And it's not only about monsoon, even the global agri commodity prices, so cotton, sugar, rubber, soya, guar, I mean, all these also impacted the agricultural incomes in last couple of years, and they are reviving from the bottom. So I think overall the rural consumption, and with additional spending both from the central and the state governments, if you look at the state budget this year, the kind of spending growth which is there next, and then the state governments are like 1.5 times of the central government spending, and several of them are doing a great job. So overall I think the rural growth for the next couple of years could be an interesting place to look at.
What is it that you're making, Navneet, of the sudden surge that one is seeing in real estate? Of course, this could be a rub-off with one of the leaders in the pack actually downsizing their debt, and that very well could see a bit of a rub-off in the entire sector. But do you think real estate as a space is something that is attractive at the current valuations?
So with the new real estate regulatory bill, and as it gets implemented, and some of the other reforms in terms of the black money law and the government talking about, structurally over a longer period this will push out the unorganized players or players who are weak in terms of their balance sheet capacity or the execution capacity, and the larger incumbents who have better execution capability, better financing capability, they can do structurally well. There is clearly a traction in the commercial real estate, both in terms of occupancy levels are going up, rentals are going up. There are some other factors as both the urban and the rural income revives, and also the as I mentioned about the availability of credit that improves. Even the seventh pay commission, your EMI paying capability goes up, and that also leads to some amount of demand. With some price correction at some point in time, demand is likely to get revived. As you mentioned, I think there are very few names because most of the other names still have a lot of stress in the balance sheet, and I think they will have some challenge. The residential space still has some challenge, but this is an interesting place because all the factors that I talked about and the structural long-term potential continues, and I'm sure I think some of these guys may do well. The survivors who have ensured that they have kept their balance sheet intact and they have the execution capability and they have the ability to grow and they reap the benefit as and when the cycle revives, I think they will do very well.
Okay, Navneet, what else is looking interesting then in the market? Any other pockets that find favor right now? And more importantly, what is it that you're advising and recommending at this juncture? Is it prudent perhaps to see how this Brexit event actually plays out? What we're seeing right now is perhaps only a technical rebound. Wait for the dust to settle down and then perhaps take a call? Or do you think the market has fallen enough after that Friday knee jerk and right now is as good as any a time to start nibbling into the stocks, you know, wherein you had been waiting for a correction to happen?
So I mean, I'll say the same thing, that globally we are in a period of higher uncertainty. Having said that, I think India would relatively do well. Structurally over the next couple of years, I think structural factors are very much intact and cyclical recovery is definitely in place. Several sectors which are more domestic oriented, but at some point in time with the price correction, maybe some of the export oriented sectors may also look interesting. From an investor's perspective, I think if you take a 3-5 year call at these levels, I think over the next couple of years, if the earnings growth are, let's say, 13-15%, then I think the markets can deliver those returns given the valuations where they are today. So I think that's the advice I would give. I think maintain the discipline of asset allocation and have the faith in the structural long-term potential of Indian equities.
You talked about exporters. And the other related theme also has been pharmaceuticals, wherein company specific, albeit, but there has been some concern with their EU as well as UK exposure too. What's the word now on pharma? Because it seems like the US FDA troubles seem to be easing out for the sector at large.
So US FDA troubles, I think they had a significant both volume and price growth in US over the last couple of years, which is likely to slow down. There are cross-currency hits that they have seen apart from the US FDA. So there have been lots of headwinds for them. But maybe at some price, some of these companies still have a lot of potential to grow over a longer period. Those who have a more balanced portfolio of US, rest of world and India, the Indian formulations market can grow still significantly. And I think apart from the pharmaceutical, one should look at the overall healthcare sector, and I'm sure I think several companies are yet to get listed. So overall healthcare as a sector over a very long period can still do well.
OMCs, Navneet, that's been the other trade which is really finding favor. I mean, just slowly how these stocks have shot up, some of them to the 52-week high is a little unbelievable. Now with crude prices again taking a bit of a backseat and so to speak, reversing their trend, what's the opinion on some of these energy names?
So in general, I would say that it also reflects that the $3 or $4 fall in the oil price, and suddenly you saw a 10% movement in some of the OMCs. We have seen several of those 10% move in several stocks. It also shows, I think, the under ownership, over ownership in some of the segments. Look at the last quarter, several of the nifty companies had 10% move in a single day after the announcement of results because they surprised positively. And I think it's somewhere it also reflects where the positioning have been, where the valuations have been, and some of the sectors or some of the stocks which are under owned, and you see some positives, and I think that they are moving up sharply in a shorter period of time.
Well, Navneet, I think we've exceeded our appointment time, but it is always great talking to you and get your views on specific investment themes and the market views. Thanks so much. It may be a long winter. Hopefully for India, it is not a very severe one. Thanks so much for joining us today. Well, that's a very important market voice. Navneet Munot, one of the largest fund managers, speaking about his thoughts on the markets. Believes India is a bit decoupled, and certainly looks that way in today's session as well. We are actually doing very, very well for ourselves, 8178. So it's actually a good time to come out with an IPO.